Hello there traders, welcome back to another video. In this video we're going to talk about the supply and demand zones, structure, liquidity and price action so that you can improve into your trading. So let's begin with the video because this one is going to be a long one because we're going to touch on a couple of more important things in the market. So in this first section of this video we're going to talk about supply and demand zones. We have the supply zone here. This is where we'll be looking to make short positions. On this side we have the bullish side, which is the demand zone. On supply zone we'll be looking to make sells. On the demand zone we'll be looking to buy, meaning long. Here we will be looking to go short, meaning we'll be looking for the market to move to the downside. On this side we'll be looking for the market to move to the up. But before we begin, we have to talk about on how to draw the supply and demand zones. The first thing that we need to do, we can see here we have this bullish candlestick, and then we have this bearish candlestick here, and then we have this 1 and 2 candlesticks. This is where the zone will begin after price has broken this bullish momentum. I hope you understand it in this way. Even if we have one like this one, the zone will start from this low to this high, but because we have this manipulation above here, we will draw the zones starting from here and then till on this low. Again guys, you have to understand it in this way because it's going to be very simple to understand it. Here we can see that we have the low of the first candlestick and then we have the high of the second candlestick. We will start from this low here and then to the higher high of either the last bullish candlestick or the high of this first bearish candlestick. If for instance here we had another candlestick like this, that means we start the zone from here, like on this side here, but because we have the higher high of this bearish candlestick, the zone will end here. Okay, it's the same thing vice versa from the demand zone. Here if we want to reduce the risk, we can still draw the zone on this last candlestick. And also another thing, we can still draw the zone from here, and then from here we choose the candlestick with a higher high. Because we have this one as a higher high, the zone will end around this section. Okay, like on this example here, the zone start here, we reduce the risk by drawing the zone from the open and then we put a higher high here. This is just this one, but we reduce the risk. Okay, I hope you understand it in that way guys. It is very much straightforward if you want to put it in that way. So because we are done on the supply zone here, let's touch on demand zone. On the demand zone we can see we have only one candlestick here. We start the zone from the high and then to the low, and in this case we can see the bearish candlestick is the one with a lower low. And then if we want to reduce the risk, we can draw the zone from the open and then to the lower low, which is this candlestick here. The same thing will apply if we have two candlesticks here, like on this one here. We start from the high and then to the lower low. In this case, we can see this one is having a lower low. So then that means we'll be looking for the market to come to this area and then we'll be looking to make some confirmations here so that the market can push to the upside. But then if we want to reduce the risk, we can start on the last candlesticks open and then to the lower low. In this case, we can see this is the rejection candlestick with lower low, not this candlestick here. I hope you understand it in that way guys, because we are going to touch on a lot of things. So let's move on to the structures because I hope right now you understand supply and demand zones. This is the basic structure that you see every time in the market. You will see a lot of patterns like this, but in reality the market doesn't move like this. The market will be choppy as hell. So I know some of you are still beginners. This is the basic structure if you want to understand it. The market will move like this. This will be a bullish trend. This will be your higher high. Like on this one, the market will break the previous high and then retraces back to make a higher low. The market will move to the upside again, make a new higher high, crossing this high, the previous high, to make a lower low. That is why we say this is a bullish trend. So in this case, we have to detect on how the market will move, because if the market was clear like this, making this lower highs here, everyone will be rich, but the market in reality will move like this. This is a bearish trend. The market will be like this. It will be choppy like this. You can see, but you can see we started from this. This is the starting point. Let's say this is your daily time frame. And then we ended here. We can see if we put a straight line here, this is just a bearish trend in the lower time frame. But here you have to ask yourself a question: where am I going to enter the market if the market is bearish in this choppy price action? Okay, the first thing that you need to do is to understand where the market is likely to make some manipulation. Meaning by manipulation, guys, if let's say we have a lower low, we have a lower high here, lower high, the market is doing something like this, making a new lower low. You have to find the liquidity like this. The market has to spike above some previous high so that you can enter on the retracement, so that the market can move to the downside. Without this, there is no way the market is likely to manipulate you. So what I mean is that we can see this is the start, this is the end here, we ended here. If we look closely, price was at this high, but now is at the low. But by looking at this price action, we can see that the market doesn't give us any model to enter the market, like any clear vision on how to enter this market. We can see someone will say this is a breakout and then sell. And then let's say maybe there are stop losses here. But then this leg will stop them out by this. This is where you should be looking to enter the market. Yes, this one, you will be lucky. But we know some traders will sell here and then put their stop here, thinking that this is a breakout. But then the market is likely to stop them out with this move here. And then the market will still shoot to their anticipated direction. So what I mean is that you have to wait for a liquidity to be taken, like wait for the market to trade above the previous high or the previous low, especially when you think that the market is breaking out. Like for instance, we can see that someone will say this is a breakout, the market is changing direction, but inversely the market will shoot to the upside and then they'll be in a loss. This is where you'll be looking to enter the market to the downside. Here you'll be looking to enter the market to the upside. So what I mean is that you have to wait for the market to make some manipulation before you can enter the market. And most of the time, you will see that in these sections here, you will see a lot of spikes like this, to show that the market is likely to push to the upside. The market is just rejecting. Okay, let's look at a real chart so that I can explain everything to you. You will understand it very clearly. Here we can see that, okay, this market is very choppy, but we started from here, we ended here. But if we look price action around this area here, we can see clearly that price traded above this high and started to reject. We can see there's a lot of rejection candlesticks here. That is why you see price is making this impulsive candlesticks here. Even on this side, let's say this is your high, you picked this high based on this impulse. The market just shoot to the upside, made some rejections here. You can see the market is making some rejections. That is why you see the market shooting to the downside. Even if you try to make an entry around this area, you already know that after every impulsive move, there will be a correction and then the market will make another impulse. So you can't just expect to buy when you see this candlestick here. I know sometimes it can move to the upside around this area, but you have to read price action very clearly. In this case, wait for some rejections after some manipulations, and we can clearly see that the market is not moving very quickly around this area here. This goes to show that this is just a correction and we have an impulse. You can clearly see that even in here, this is just a correction. Here, this is just a correction. That is why you see this strong move to the downside only. There is no bullish candlestick that is very strong in this situation. Here is just corrections. For those who don't know, some of you can call this a consolidation, but it's just a correction. You can call it any name that you like, but as long as you understand how to read price action, it's correct, everything is fine, because we already know there's a lot of namings in this market. So let's look at this one here. We have this messy price action here. Let's look at price action first. We have this strong moves to the downside, but when price is moving to the upside, look, it's moving very slow. This is very slow. Here is very slow, but when we move to the downside, the market is very fast. Here, yes, we have a internal, this is an internal impulse. That is why you see a correction and then we see another strong move to the upside. But then if you look closely, the market, when it moves to the downside, is very strong. So that means here was just an internal correction. For a structure purposes, let me show you what I mean. If we have an impulse like this, and then we have a correction like this, followed by another impulse. In these areas here, you will still see some impulse, correction, impulses, correction, like this, okay? This is what you'll see. This is just internal corrections. And then you should also understand that in this section, I'll be looking to enter short when price is above the previous highs only. Okay, if we look closely from this previous high, we have some rejections. That is why you see prices moving to the downside. And we have this low, 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 and this low. But because you are trading in a correction, you have to understand that the market, yes, is likely to give you some profit, but the higher chances of you losing that trade are very high because you are trading in a correction. You can clearly see that after price has broken this low, you can see a rejection here. You can see this is a rejection. And then after price has traded above here, we also see a rejection, but this one could have stopped you out. But then there's another rejection here. Price was shooting to the downside very aggressively. And by reading price again, price traded below this previous low. And then look, this is just a rejection. Price was shooting to the downside, but then it went up again. Okay, you just have to understand it in that way. And this one was very simple to trade. We have a rejection. That is why you see this strong move to the downside. You have to understand that you have to wait for a something like this and then wait for some sort of a rejection to the downside to be able to understand how the market behaves. And also another thing, if we look on the side, price was like this and then it shoot to the upside. It broke in this low and then this high here and then made a rejection. That is why you see this strong move to the downside. I hope you understand it in that way. So let's move on to where you'll be able to spot this kind of things happening in the market. Most of the time you'll see them liquidity, you'll find them mostly on price breaking the low. Here, this is where you'll be looking to go to the upside. After price breaking the high, the previous high, this is where you'll be looking to go short. And also check the price section here. If this is an impulse, that means you'll be expecting another impulse in this. Even here, sometimes the market can make a high, but then shoot to the upside. But then we have another high here. You have to wait for this high to be taken out so that you can enter the market. Even on this area, you have to wait for the low to be taken out and then find some price action here. If we will have, let's say, a demand zone here, this will be a demand zone. Then you'll be waiting for the market to manipulate this, get into the demand zone, and then wait for a confirmation. So another thing is that even on trend lines, you'll still spot the same thing that will happen in the market. You can see that we have this low and then this high. The market manipulated this previous high here and then shoot to the downside, and also made this low and then price traded below it and then it shoot to the upside. Okay, and also on support and resistance, you'll still spot the same thing happening in the market. You have to understand that price is very repetitive. It likes to make some silly moves. That is why you see you have more losses than wins. It's because you don't have a clear mind on understanding how price behaves. So if you put this into your trading, you'll understand everything is very clear now. And another thing that I want to point out is that if you have a trading strategy, number one is that your trading strategy has to have a invalidation level. This is why you don't want to see price crossing before you can make an entry. Okay, also has to have a proper risk to reward, has to have a rules, it has to have some sort of a strategy to manage the trade, because this is also a strategy here. You have to also have a trading strategy that have some rules here to manage those trade. So what I mean is that you have to understand that, let's say right now, price is shooting to the downside, but then you don't have a strategy to manage the trade, price then move to the upside. That means you'll still be in a loss. But if you have something like a strategy to manage that trade, this will be good because you might still cash in and then still go out on break even, because you'll be holding maybe let's say a last trade around this area. And let me say like this, let's say we are moving to the upside and then you enter the market around here and then price is moving, but then suddenly you see this move, your stop loss is here. But if you have a strategy to manage a trade like we do, that means here you'll be holding, or maybe here in this case we will close and then put one trade to break even. In this case we have a strategy that focuses on this area here. So if you want to learn more about that, the first link in the description below. So let's move on. Here we're going to talk about price. Here have to talk about price section. Here we have this area, but we don't even understand. If you are able to read price section very clearly, you will understand everything that is happening in the market. The market is moving to the upside here. Let's draw. Okay, but by drawing this waveform here, we can see that every time price crosses above a high, it should lower. Even here, it crosses below this low, and then we can see a lot of rejections here. If we clear this out, you will see that here we can clearly see that there's a lot of rejections. Let me show you an example on how to understand price action. We have this wick for the downside, and then we have this wick for the upside, and also we have this wick. These two candlesticks here, this goes to show that price is still deciding where the market might behave. In this situation like this, you just have to avoid it because the market is just in the middle of deciding whether to go up or go to the downside. So then, if you see this kind of candlesticks here, it goes to show that we are rejecting the bearish trend. Even in this one, even if it closes bullish, because you can see this one is bearish, this one is bullish. You can clearly see that the market goes to show that it's rejecting the bearish trend. That is why you see this week here, the people that are pushing the market to the downside, they are not very strong. Even on this side, we can see that the market is just pushing strongly to the downside, but the candlesticks look different. If you move on to the lower time frame, you'll still see the same pattern behavior. If you go and backtest, you'll see the same thing that is happening in the market. So after every liquidity that was taken, that means you should focus on these two candlesticks. Okay, I know this is not a full trading strategy, but I wanted to guide you on how to see the market the right way. Even if you are a beginner, please re-watch this video so that you can understand everything that I am saying. Let's go back to this one. Let's look at price action behavior. You'll still understand it very clearly. If you look closely from this area, we can see we have a huge rejection from the upside, and also price closed around here. So that means the price is still very strong to the downside. Even if this, let's say this is the 5 minutes candlestick, if you move on to the 15 minutes, you will see a very strong move, because people get scared with this, let's say this retracement here, and then they close their position here. If you are still trading like that, then I believe you have to go and backtest your trading psychology or something like that. But looking at price action, you can clearly see that we have some rejections, even if they are not very strong. From here, guys, you have to understand that price is still very strong to the downside. And also, you have to understand that you'll be looking to find those rejections after every liquidity that was taken. You have to find liquidity that was taken before you can find a rejection. Okay? People don't understand that. From here, let's say you are looking for liquidity. Let's say you are stopped out here, and then you try to find another rejection. Don't find it here. This is another rejection. Maybe let's say you are stopped out 2 times, and then you don't want to get in because you lost another trade, and this is where your psychology has to be very strong. And then you lost 2 trades, but then you miss this one. You move on to another pair, and then you miss this whole move. That's how trading will become for you. So then, by looking at this next price section, when the market was moving to the downside, let's find some liquidities here. You can see price made a rejection. Here, you can see rejection, move to the upside, shoot to the downside. We have this low, rejection, move. Okay? Have to understand it in that way. Even if you took this one here, you'll still gain some profit. You'll be in a correction. So let's look at this example here. This one is very clear. We have this previous low, and then we have this rejection. We can clearly see that the market was shooting to the downside, but then the buyers went in very hard here. That's how you should understand how the market behaves. And sometimes you can see that here, let's say we have our demand zone. Because we don't have any rejection here, after prices traded below our demand zone, someone won't even try to enter here because price has crossed their supply on demand zones. I hope you understand it in that way, guys, because price is very easy to understand. If you start to read price action, everything will become very easy for you. Here, this is the previous example that we talked about. I wanted to touch on another things here. You can see here guys, we still have a low here. The market was moving to the upside and then shoot to the downside. This is the low. And then suddenly it rejected here and then shoot to the upside, make this low. This is a low here. And then it moved to the upside, came down very aggressively to make this low of this bearish candlestick. And then suddenly it started to make some funny moves, reject, and then that is why you see this moving to the upside. If you move on to the lower time frame, guys, you'll still see those kind of things that I'm talking about. It's just that this is not a full trading strategy. I just wanted to guide you on how you can make some things to understand price action. Okay, even here, guys, you can see this is a strong pressing move. That is why you see the market moving to the upside. You'll still find this kind of things. They are everywhere. They are everywhere. Even here, this one is the one that I told you about, just to avoid it, because the market is pressing to the downside and then is pushing to the upside very aggressively. And then we have a rejection here. That is why you see the market moving to the upside. Okay, let's look at another example here. We have this move here. If we look closely, the market moved like this, made something like this. That means we have a lower low, a lower low. So that means we're expecting the market to make a lower high to go short. But then the market moved aggressively to the upside. So right now that means we have a structure like this. And then we have liquidity that was taken around here. And then you wait here and then you sell. And here we can see a rejection candlestick. These things, guys, are everywhere. This one is just confusing because we have the first one and the first one. But the problem is one here. This example is not the same as this one. This one here is having a high, but here we don't have it based on this candlestick alone. Okay, unless if you took it in this way that the market is breaking this low, then you will find a rejection. But then the market suddenly just pushes through this low after making another rejection to the downside, and then we have another rejection. Let's say you are stopped here, you still have another one here that you can take. Even here we can see this example here is the same as this one here. We have this low and then the market shoot to the upside. Even here we have the same thing. That is why you see the market moving to the upside. And also, if you want to be very efficient with this, you have to like backtest a lot. If you don't backtest, there's nothing that will benefit you from this video, because you're watching this video as if like it's a movie. So if you're watching this video like it's a movie, then that means you wasted your time watching this video. So let's look at this example here. We have some rejections. You can see price was just playing around, and then we can see that the market was just still deciding. This one is a decision candle, and then we have another bullish candle here. But this one, if you look closely, it has a lower wick. Like it's like this. This one here is lower than this one. This one is big, this one is small. So that means they are pushing the market to the downside. Even if you look closely here, the wicks are very huge on the top here. If you understand it in that way, you will understand price action very easily. Even by looking at this one here, price didn't even cross here. Price just retraced. But if you look closely here, there's a lot of rejections. That is why you see the market moving to the upside. Even here, guys, price shoot to the downside, made a high, retraced, broke this, and then from here you can see a rejection. If you look closely, look guys, I want to show you something. Look at this candlestick alone. It's like this. Sorry for using the blue color. It's like this. So by watching this video so far, you already understand that price is just pushing to the downside. Here they are tried, but nah. So that means this one is strong, this one is weak. So let's move on to another example, because I think I've made a lot of slides here. Let's look at this one, guys. This one can be very volatile. Let's look at this area here. We have this low. Let's look at this side. You can see clearly that price traded below this low. Look at this candlestick. I hope you understand it. Let's look at another example in this side. Look at this wick and look at the top wick. Look at this wick here and look at this wick. What do you see? Do you still see the same thing? If you do, then I guess everything is looking nice on your side. These things, guys, they are just everywhere. If you go and backtest, you'll understand price action very clearly. Okay, let's look at this last example, because I don't want to make this video very longer. If we look at this high, we have this high. Look at this wicks here. This one is slightly smaller than this one. You can take it as if it's a indecision candle. Even by looking at this one here, you can still see the same pattern over and over again. Look at the wicks, because the wicks will give you a lot of information to understand the market very clearly. Every time the market breaks a low, it should do something like this. Even here, it broke the low. Look at this candlestick here. It broke the high. This one, look at this candlestick. It's like this. Okay, so do you think you'll buy in this situation? Because this one is strong. this one is weak. So look at this price action. You can see who's buying too much here. They are still buying too much here. But then the next candlestick will give you a lot of information. Look at this. I hope you understand very clearly right now. That is why you see the market shooting to the downside. Okay, I hope you understand it in that way, guys. I guess for now you can still practice by looking at this area. Okay, I'll give you this PDF. You'll find the PDF on Telegram for free. Also consider subscribing to the channel and like this video and leave a comment below. And also those who want to join our private community, they will find the link in the description below.